is October 7th, 2022, and today we'll be talking about MMTLP again. This is the third day in a row that I made a video, and the third time that I'm talking about MMTLP, so it might seem monotonous. But today's video is actually a little bit different. It's because we have the first year anniversary of trading on the OTC, or the over-the-counter exchange of MMTLP. So, what is MMTLP? Just a general overview. The TLDR, or executive summary, is MMTLP is an oil and gas play. There's approximately 3.2 billion barrels of oil in the ground, plus some natural gas. And MMTLP is a 49% revenue interest in that, or the assets are a 49% revenue interest. The oil and gas is located near El Paso, Texas, and El Paso has this thing called a Marathon refinery, so there's a refinery close by. It's on private land in Texas, so you don't need a federal lease to use it, to get access to it. So MetaMaterials is spinning out these assets, which currently trade under the stock symbol MMTLP. They're also known as the Series A preferred shares, and they are oil and gas assets. So it's an oil and gas play in that sense. And there are about 165 million shares. And according to the FINRA OTC Equities Info, there's about 6.62 million shares short of MetaMaterials right now, with an average trading volume of 569,000 shares. Now, I don't know what that average is, how many days that average is over. It's however many days FINRA is over. But if we take that as an average trading volume, that means that there's about 11.63 days to cover. So remember I said I didn't know how many days FINRA is using for their average. If you look at the average volume, for instance, on TradingView, you see that the average volume over 10 days is about 349,000 shares, so significantly less than what FINRA is using. If you look, the volumes have been decreasing over time, but relatively constant around since May to October now timeframe. But when it first traded, there was a large amount of volume, right? As there was about 14 million shares that were originally short that they wanted to close their positions on. So let's see what else. So I mentioned that the S1A had been. Let me go back. So yeah, there's about 11.63 days to cover. Also, so this is a spin-out play. The company called MetaMaterials is spinning out these oil and gas assets, which currently that spin-out is traded under the stock symbol MMTLP. But it is going to spin out to a company called NextBridge Hydrocarbons, and the filing for that spin-out, the S1, has been filed. And in fact, there is an S1A amendment number 2, which is out. And the interesting thing is that in the S1 amendment number 2, they specifically state a couple things. They state that it is traded on the OTC. So they say, before distribution, Meta's Series A preferred stock was traded on the OTC market under the trading symbol MMTLP. The OTC market does not constitute an established stock exchange, and as a result, the historic trading prices for the shares of MMTLP may not be a reliable benchmark on which to determine the value of the shares of our common stock that you will receive in the distribution. Basically, they're saying that the prices for MMTLP, current prices, may not be a reliable benchmark to determine the value of these shares. Okay. Now, the third thing that they say after talking about things is they actually tell you about the possibility of a short squeeze. In particular, if any investors have sold shares of MMTLP short, then in connection with the distribution, such investors may feel compelled to buy shares of MMTLP to cover such sales before the distribution, right? If this were to occur, given the potential high demand from our buyers with a relatively low supply of MMTLP shares available for sale on the OTC market, the MMTLP price per share, as shown on the OTC market, may rise significantly. Basically, they're saying this thing could short squeeze. It's written right in their S1. Anyway, so that's basically what's going on with MMTLP in a nutshell. Of course, if you want to know the details of the story, I've got two videos, Thoughts About Oil Part 2 and Part 3, which talk about a company called Torchlight Energy, which later merged with another company called Metamaterials, and they spun out that Torchlight Energy oil and gas assets as a Series A preferred stock, which later on became traded under the stock symbol MMTLP. And then we talk about how much the value of those oil and gas assets are in Thoughts on Oil Part 3, MMTLP, NextBridge Hydrocarbons. So, yeah, we also go over how we calculate the value and all that stuff, right? So if you want the details, there's 2 videos. They're about, 40 minutes or 35 minutes each, and they tell you exactly what's going on with the history, where it came from, okay? I won't go over that in this video because, there's no sense repeating. Now, if you want to know about the S1 filings that have taken place, there have been 3 filings so far. The S1 has been filed. I've got 2 videos about the S1 when they were first filed. You can check those out for the details of exactly what's gone on. And an S1A has been filed, an amendment to the S1, and I have a video just on that one amendment and what the differences are between the S1 and the S1 amendment. Mostly it's just fixing up a few things, clarifying things, right? And then they have an S1A amendment number 2 that was filed, and that talks about the difference between Amendment 1 and Amendment 2, right? So to know everything about the S1, check out the first 2 videos first and see what the difference is in the S1A, and then look at the S1A2, right? Finally, if you want the latest information on what's going on with metamaterials, you may want to have a look at, You may want to have a look at, I've got 2 videos over here about the oil and gas assets and how those oil and gas assets are being developed. They're currently drilling some wells, and we have some info as to where the wells are being drilled, how close they are to certain pipelines. There's a natural gas pipeline, there's an oil pipeline in the area, etc., right? So there's info about that. So that's the overview on MMTLP, and by the way, MMTLP stands for Metamaterials Torchlight Preferred Shares. Okay, so let's talk about oil, because this is an oil and gas play. If we look at the Wall Street Journal today, October 7th, 2022, we see that in the front page of the headline, they talk about OPEC, and the U.S. plots a response to OPEC after the cut in output. OPEC plans to cut output by about 2 million barrels per day. Okay, this is essentially the article over here, and let's go into what the article is talking about. OPEC's decision to slash oil production has Washington considering responses, which could include measures aimed at breaking the cartel's hold on markets or limiting U.S. oil exports should shortages emerge. I don't know how much of a hold the cartel has on pricing of oil. Right now, oil is being priced on the futures markets in America. So that's basically what determines the pricing of oil, right? I mean, oil is traded in the futures market every single day, and we see, based upon perceived supply and demand, what the price of oil is. Anyway, let's go on forward. The cutback by the Organization of Petroleum Exporting Countries and its Russia-led allies is the latest dilemma for President Biden, who has sought to transition the U.S. away from fossil fuels while at the same time keeping consumer prices in check. A long fall in gasoline prices has started to reverse this week's decision by OPEC to cut oil production by 2 million barrels a day. That threatens to push prices higher, again, just weeks before the November 8th midterm election. So elections are coming up, and the president probably does not want high oil prices at that time, and definitely not high gas prices. That's what the current thought is. Regardless of elections, I think high oil prices, the American people may not like that. In either case, Mr. Biden and lawmakers have derided the decision, raising the prospect of retaliatory action against OPEC and Saudi Arabia, its largest producer. Congressional leaders are threatening legislation that would charge OPEC members in front of the World Trade Organization or subject them to U.S. antitrust law. OPEC is really... They're not based in the U.S. They're international. So I don't know about U.S. antitrust law. Can we actually go out there and say, hey, these companies that are outside of our jurisdiction are doing antitrust stuff and charge them? I don't know. Anyway, OPEC production cuts. The OPEC production cuts threatens to accelerate an overhaul of the U.S.-Saudi relations that began to take shape with the rise of King Salam's son, Mohammed bin Salman, to Crown Prince in 2017. Okay. And they say there's a lot of alternatives. We haven't made up our minds yet, Mr. Biden, a Democrat, said outside the White House on Thursday. And the White House has called on U.S. oil producers to increase oil output, but the appetite for doing so has been hamstrung by Wall Street investors who have asked that the companies focus on returning cash to shareholders rather than reinvesting it in more production. Okay, so if you were a U.S. oil producer, you have a choice. You know that there is a current administration which has promoted the issue of climate change, and they do not want to use fossil fuels. They want to move the U.S. away from fossil fuels. And so you have a choice. You can either increase your production of fossil fuels, which would cost a fair amount of money, with the knowledge that this current administration would try to punish you and limit the amount of fossil fuels you will produce. Does that seem logical? Or would you try to make as much money as you can while prices are high by just returning value to shareholders? I mean, why should you invest in the future if the administration has indicated that they don't want you to have a future? Anyway, moving on. U.S. oil output has been mostly flat this year. I'm not going to go over this article. It's pretty good, though. It's a good article. I would recommend you read it. Check it out. It talks about the Biden administration and what the Biden administration has been doing with oil. It also talks about the relationships between the Saudis and the U.S. So a lot of people think that the relationship has soured, and that the relationship was better under the previous administration. I don't know that it really has or not. The way I look at it is, let's imagine that there's a conversation going on, right, between the U.S. and Saudi Arabia. The U.S. says to Saudi Arabia, hey, we want you to increase more oil we want you to increase your oil production because, we need it. Oil prices are high. And Saudi say, you want us to increase production because oil prices are high, okay? The U.S. is the world's largest oil producer. Why don't you increase your production? And the U.S. would respond with something like, we don't intend to increase our production. We intend to keep our oil in the ground up until you've run out of oil. And then, after you're all done with your oil and the prices have gone up, we'll sell our own oil. And Saudis are like, I'm not sure that makes a lot of sense. I mean, you want to keep your oil in the ground and sell them at high prices, and you want us to sell our oil at low prices. Not sure I agree with that. And the U.S. might respond with something like, you're helping Russia. At which point the Saudis would say, yeah, I think I might just sell my oil to Europe and maybe to China or Asia. We don't really need to sell it to you. Everyone wants oil, right? But if you don't want to buy our oil, it's okay with us. It's not a problem. So, and of course the U.S. might say something like, well, we gave you a whole bunch of F-15s and a whole bunch of weapons. We can withhold spare parts from you. You know that, don't you? And the Saudis might say something like, well, yeah, you could withhold spare parts, but, don't those F-15s, don't they run on something called fuel? I wonder where that fuel comes from. At which point, the U.S. might say something like, if you don't play ball with us, that's a nice pipeline you got there. You don't play ball with us, it'd be a shame if anything happened to that pipeline. So, Saudis might say something like, well, if anything did happen to that pipeline that we, built, which that pipeline is used to supply oil to the world, so that would probably cause the price of oil to increase significantly. And so the U.S. might come back and say something like, well, we need you to increase your oil and oil production. We really need it. And it's important for us, we really, and they're like, yeah, you pump your own oil, but they're like, we in the U.S., we've been, we've gone out of our way to supply oil to the world. We've been taking oil out of our strategic petroleum reserves, and we have elections coming up and, stuff like that. You can't expect us to go off and selling our own oil, right? And they're probably something like, well, draining your strategic petroleum reserve, that's your thing. If you choose to do that, go ahead. I mean, I can't be responsible for your bad actions. We're going to, it's quite possible that our reserves are running out And if they are, we'd like to cut back production and sell that oil at a higher price later on, just like you probably. So anyway, I imagine that's the way the conversations will be going, like in terms of the negotiations between the Saudis and the U.S. Anyway, let's look at the price of metamaterials. Metamaterials, which is an oil and gas play, right? It's an oil asset play. On Wednesday, October 5th, what happened was that the S1 Amendment number 2 was filed with the SEC, and that clearly spelt out the fact that these Series A preferred shares were trading under the stock symbol MMTLP, and it declared that the prices for MMTLP may not reflect the underlying value, and it also discussed the possibility of a short squeeze in MMTLP. Okay? And what happened as a result of that? Well, on October 5th, we saw the price of MMTLP go up significantly. And then October 6th, right? So, the S1 came out. Here's the part of the S1, right? That it's on page 23, by the way. So if you read page 23, you see that they clearly discuss the short squeeze. So that happened on Wednesday, and we see that clearly the price of MMTLP went up that day on Wednesday. And on Thursday, if we look at Thursday, October 6th, MMTLP price went up significantly as well too. At the start of the day, it jumped, right? After that, after word of that S1A got around, and the fact that, people started reading it and they saw that one paragraph in there about the MMTLP and how it could be undervalued, the price went up dramatically, and it got to about $1.95, stayed there for most of the day. It seemed to have a hard cap there. But then something happened at the end of the day. At the end of the day, it just broke through, and it went to $1.97 by the end of the day. And after hours, it went to about $2 a share. Then comes Friday. Friday is today, the time I'm making this video. On Friday, we see this. The entire market is red. Red big time, okay? The entire market's red. But what happened to MMTLP? MMTLP is green. The entire market's red. MMTLP is green. It surged up to $2.50 in the morning. It got slammed by shorts immediately, right? But they slammed it down to what? $2.10? And then it started coming back up again, right? By the end of the day, it was at 246. It ended the day 246, significantly in the green, up 25% almost, 24.87%, when the rest of the market looked like this. So, when the rest of the market's green, red, almost everything is green. The only thing that's not red in this, in the market today is Lockheed Martin, Northrop Grumman, defense contractors, basically. They're not red, okay? The rest of the market, even ExxonMobil is red. I mean, give me a break. But MMTLP is green, okay? Not only is MMTLP green, and it ended the day at 246. If we look at the entire history of MMTLP's trading, which is just 1 year now, we've had exactly 1 year of trading, we see that it closed at 246, which is higher than at any other time in MMTLP except for the first few days of trading. Okay, first few days it got as high as 320, and then second day it got as high as over 280. But then afterwards, the price was relatively stable and flat. Today, it ended at 246. It ended green. It ended green when the rest of the market ended red. And it closed at basically an all-time high for most of the time it was traded. Now, what does that mean? That means that most people who actually bought and held, okay, if you bought this after the second or third day, you made money. Okay, you made money then at that point. Okay, if you bought it at anything less than 247, which is most of the time it was trading, you're up. You're positive. And I was reminded the fact that it was the 1 year anniversary of when MMTLP started trading by Metasport Channel. this guy's got a great Twitter account. I suggest you definitely, I highly recommend subscribing to his Twitter channel. He tells you everything that's going on with MMTLP. Okay. Anyway, he says, hey, it's been 1 year now. And I said, man, if it's been 1 year, that means anyone who bought a year ago, that means it's getting to the point where, you know, you might be taxed under long-term capital gains. So by the time this thing starts squeezing, by the time this thing starts moving, could be that, you know, you might wind up paying long-term capital gains taxes instead of, you know, the short-term stuff. And the interesting thing, I made this tweet, right? So this was kind of interesting. I said, you know, if the day keeps going like it has, this tweet obviously wasn't before the end of the day, it'll be a very red day for most stocks, which it was, except for MMTLP, which is very green, right? Now, what does that really mean? That means that MMTLP could get exposure in the news, right? Because it's one of the few green stocks on a completely red day, right? It stands out in the crowd, okay? When it gets exposure like that, it might bring in a lot of new buyers. We get a lot of new buyers, that might drive up prices, right? That might drive up prices significantly. I mean, look at this. Totally red day. Green, but not only green, up 23% green, okay? Up 23% green. Oh, at the time I made this this slide over here, which was not the end of the day. By the time the day ended, it was 246, so it's up 25% almost, okay? 25%. So you're up 25% in a single day when the rest of the market is red. That's got to draw attention. And it might draw attention, right? So then today, 246. Well, so what do I think the shares are worth? Well, I made a chart a while back. The chart basically lists the price of oil and projects a fair value of what the dividend would be worth, right, given a particular price of oil. It takes into account the fact that there's 3.2 billion barrels of oil, 12% discount for oil in the ground, takes into account the 49% revenue interest. It assumes that there would be some sort of what is it? It assumes that there would be something like a stock swap, so you don't really wind up paying corporate taxes on it because you don't really, you know, it's a tax-free event, right? It's a non-taxable event is the way. You would wind up paying the underwriter's fee, probably of 10% or so, and it takes into account the 165 million shares. I won't go into the in-depth details of the math behind it. There's not much math, but if you do want to see the math, there's a link that will be provided in the description, and it'll go over exactly how that calculation works and how I made a spreadsheet out of that. But in any case, if we look at the price of oil today, the price of oil today is very interesting. It ended the day at the time I made this video of $92.15 a share, which oddly enough is almost exactly what the 1 year average price of oil is, $92.15 a day. If we take the average price of oil over a whole year, right, it's going to come out to $92.15. Wow. And where do you think the price of oil is going to go from there? You think it's going to keep going up? There's a strong chance it would, given, you know, the oil situation that's been going on that we talked about earlier. Anyway, so given the $92.15 price for oil, the estimated value of the dividend is around $58.47. Pretty close. And if that price goes up, it's going to keep heading up. It's going to keep going up and to the right, looks like. And now this is for what I call a fair value. Okay, this is what the stock would intrinsically be worth, I think. In a squeeze scenario, if this thing squeezes, if people start buying it like crazy, the price can go a lot higher. There's only 165 million shares of this. Only 165 million shares, okay? And the volumes are relatively low, right? I mean, don't forget, it's currently at $2.46. We're thinking it could hit $58, and in a squeeze scenario, it could go a lot higher. Anyway, I'd like to end by stating that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is October 7th, 2022, and this channel is called Market Moves, and I'm Tony, and I'd like to say thanks for watching this video, and good night and goodbye.